Once again, Mr. Sharma, Shankar, yeah, and call me AKB, okay? Yeah, yeah. It's wonderful to have you. And, whenever we sort of want to get a differentiated and yet perceptive voice on the Indian markets, let me say it on record that we look for your comments.
Sir, coming from you, that's an honor and a privilege.
So once again, thank you for agreeing to be here. There is no fire, but we'll have a fireside chat. Let me, begin without any, ado. What, in brief, would you characterize the current state of the markets?
So, the current state of the markets can be simply looked at it in terms of a very long-term catch-up of the Indian equity markets with global markets. And let me explain this a bit. So, if you look at the period of 10 years from 2010, which when we were just emerging from the the GFC, till all the way up till 2020 March. So I'll give you some broad numbers. So January of 2008, the Sensex was 21,000. And just prior to COVID, the Sensex, which was in 2020, say February end, the Sensex was 37,000. So that's a gain of 16,000 points, or roughly whatever, 50% or 60% over a period of nearly 13 years.
That's right.
That annualized to something like 4 or 5% CAGR per year. Any self-respecting fixed deposit, even if the risk of going bust, you would still give it to PNC Bank and probably make more money.
That's right.
Okay, having invested in the Indian equity markets. And by the way, this return was in rupee terms. If you looked at the dollar returns, it was actually slightly negative in that entire period. And ultimately, the world is still a dollarized world, and we look at equity market returns in dollar terms to equalize things across all currencies and all countries. So if you look at it on that basis, India delivered precisely zero in dollar terms for nearly, I would think, 12 or 13 years prior to COVID. So the equity returns since COVID have been fabulous. We know that, right? If you eliminate just that spike from 35,000, we are now at 62,000 or 60,000 of Sensex, which is fabulous returns by any standards. But it is nothing but a correction of a 10-12 year period of very, very low, in fact, abysmal returns. So we must understand this, AKB. Markets are cyclical.
So first point you're making is it's a correction. What is happening?
It's a cyclical catch-up in equity market returns. Because markets are cyclical by nature. This is one inherent, inescapable fact. We romanticize the good part and we ignore the bad part. But ultimately, we are going to get both parts.
Oh, that's a warning.
Always. It's a given. So Japanese markets can be the worst market, but it will have 2 or 3 fantastic years in a 10-year period when it will beat the daylights out of any market. So will a Argentinian market, or so will be a Zimbabwe market. Every market has its day. We are having our day. That is underpinned by, obviously, our having done much better than the rest of the world in a very problematic last, let's say, 12 months. But as we were discussing just prior to this, India does well in global economic crisis. And there is a different reason for that, and that is because of the 91 crisis taught us a lot of things on how to make a national, at least a foreign exchange part of a balance sheet, very bulletproof. So we usually do well in global macro meltdowns. 2000 meltdown.com, we were not that affected. 2008, we were affected, but not as badly. And again, 2020 till 22, which is in variety of forms problematic, we have still done relatively better. So we actually love, global crisis as Indians. Yes,
that's right. So how would you characterize the market now?
No, I think India has, the building blocks of India's current situations were laid in 91. Again, coming out of a crisis. Crisis taught us a lot of things. At every successive level of government, irrespective of who's been there,
Sure.
the leaders have been very focused on not shaking up the foundation of that knowledge, or that crisis knowledge. We have kept building upon it. This government is building upon the previous government's knowledge base. The previous government built upon the previous government's knowledge base, and so on. I think overall, it is hard to find a country which is ticking all the boxes as India is right now.
Well, that's a big vote of confidence in the markets.
I'll break it up for you, AKB.
Sure.
Look at the world. Let's start from the Far East,
Fair
Japan.
enough. Yeah.
Anybody sensible wanting to invest there?
Sure.
No way. Let's move closer. You have China, then you have the Pacific Rim.
Yeah.
Taiwan has had its ups and downs, but it's because it's such a tech-centric and foundry-centric country, it will have its global cyclicality based on the semiconductor market, but a very single industry market. So, and it's a small market at the end of the day. China, again, vast unknown problems. Yeah. The known problems are bad enough. The unknown problems we have no idea about. And then you move to South Asia. India is the only game in town. Move again to the rest of the world from here, going west. How many countries do you... Europe, I think, is frankly no future except to become a giant tourist destination for Indians and Chinese. I mean, I don't see what else they have.
You are right, yeah.
I mean, I have a very good German friend in Dubai who's an investor in our funds. And he tells me that Germany, which is the best one of the lot, 1 out of 5 jobs is auto.
Yeah.
And most of those auto jobs won't have any meaningful existence 20 years from now. Okay, the rest is basically in various forms of industrial engineering, again, which they're not keeping pace with tech. So he was saying, I don't see what's the future for Germany. Now, if Germany doesn't have a future, I mean, why even talk about France and the other countries?
What about the US?
Yeah, so the interesting thing is if you look at equity market returns, AKB, over a 30-year period, the first market, the number one market, heads and shoulders above everybody else, has been the US.
Okay, in a 30-year time frame.
In a 30-year time frame, okay? But which is the number 2 market?
Don't test my knowledge.
India.
India, okay.
Everybody knows this, the first one, but very few people know the second one.
Okay.
India.
Okay.
And that is what I'm coming to. That
even in dollar terms?
Even in dollar terms.
Okay.
I'm talking dollar terms.
Yeah, yeah.
So if you now come to further west, you have the US, and then you go down to Latin America. Again, very volatile life, volatile existence. So think about it. What are the options in this world today for equity risk that you want to take? US clearly, no matter what the problem is, has a huge plethora of choices in terms of sectors and companies and the tech edge that they have. But after that, we have just India, and that's it.
So how would you, let's say, I mean, you gave a fantastic, global worldview on the state of the Indian market, but would you like to or care to examine the pluses and minuses between India and China?
Yeah, sure.
Yeah.
So on the plus side, of course, we have plenty of pluses. And in my view, one of the biggest pluses is that on a global basis, we are the good boys of the world.
You still have the soft power, you say?
We are a good boy, whereas we are a soft power. People still like us. People may do business with the Chinese, but I can tell you, I live in Dubai. I meet a lot of businessmen from across the world. They don't like doing business with the Chinese for a variety of reasons. I hope there are no Chinese here.
No, I mean, there's no harm in telling the truth.
But the fact of the matter is that people trust India and Indians a lot more than they trust China and Chinese.
Okay.
And that is a big factor in the post-COVID world when people have lost whatever residual trust they had in China. And the general dislike I find, I went to Europe, I travel to Europe very often amongst European businessmen for China, is almost pathological, that they don't want to have anything to do with China. It's almost like that. So taking out supply chains will take time. But I think our plus is that we've generally been a well-behaved model student in the world economic landscape. And we will get our rewards for being that nice guy. We don't do cyber attacks. We don't encroach on other people's territories. We don't do all the hanky-panky that some of our neighbors do.
These are the good boy qualities.
This is the good boy qualities that may make you look a loser for some time. It happens. But I think usually good boys will finish first.
Uh-huh.
Okay.
Okay.
And I think this is our chance to finish first rather than finish last, as we have done in the past.
Yeah.
That apart, I think there is a genuine shift of businesses from China to not just India, but there are neighboring countries as well. And in this world, I think Vietnam, for all its goodness, cannot absorb the kind of capacities in terms of manpower.
I was coming to that actually. Vietnam, I was coming to that. But you were saying that the capacity doesn't exist there.
Cannot go to that level, just the sheer size and the availability of labor. I mean, India can, at least on paper, have a lot of labor, a lot of land, right?
Yes, yes.
No other country offers itself, as, with those advantages.
Yeah.
And of course, the debit side is there that usually we've been slower to move off the blocks. I mean, we're a democracy. We will take, slower to make some certain decisions. This government has been good on that. So I don't think there are too many minuses. I mean, one of the key things, and I wrote an article in Business Standard, by the way, 2012, when we compared the national balance sheets of India and China, and we looked at all the hidden debt.
Chinese have.
Okay, that the Chinese have, and it was a controversial article, back then, because now it's consensus that they have 250% or 300% of GDP. Debt as GDP, debt to GDP ratios. But back then it wasn't so. It was almost that they have grown without debt, and then we dissected the debt at every level and came to a number of 250% back then. And we said that we are going to look worse today in comparison because people don't look at the debt component underpinning the growth. But eventually that debt will come home to roost. And a lot of those problems that China has today, 10 years on, is because of the accumulation of debt to fund their growth. So you have a real estate bust, which is threatening large parts of the, the mortgage market. Or you have corporate level debt, you have provincial level debt, you have state level debt. India, fortunately, is still a manageable debt levels at all levels.
So, from a geopolitical point of view, also, you don't see the Indian market story getting impacted. And when I say geopolitical, I not only refer to the Ukraine-Russia crisis, but also to what is happening on our borders on our western side.
So, Russia-Ukraine crisis is in the price. In my view, incrementally, I don't think there is much damage from a stock market perspective that you can see. That said, there is still damage to businesses in India. I talked to a lot of companies. European demand has been affected. We know that. I think it will take a while to come back. That's a fact. But whatever is there is there. I mean, it's already to a large extent factored in by markets, by companies and everybody. What is happening near to our borders, I don't think the stock market per se gets affected by that. Because I don't believe that it will escalate into something which is very major. Skirmishes, if you want to call them that, the stock markets, I'm not saying it's a good thing, but the stock markets don't care about a few losses of lives at the borders.
Sure.
Doesn't sound good, but that's the way markets are.
That's the way markets are. Yeah, that's right. Yeah. You set the scene very well. Now let me go to the next stage. How do you see the Indian markets in the next 2 years or 3 years or maybe 5 years, if it is not too long into the future?
So my view is very, very clear, unequivocal, that I think India is going to be easily the best and the top 2 performing markets in the world in the next.
Well, that's not saying much, because they have already been, by your numbers, you said that you're saying India
only last 1 year, but prior to that we had a lost decade. So to be clear, it was not always the case.
Sure.
I think that cyclical trend is over, and now the new cycle has begun in the last 12 months' time. I think, and by the way, it's important to understand that cycles of this kind are durable.
Okay.
Either way, in a bad way or in a good way. So if you go into a bear market on a relative basis, it will take a while for large economies to come back. Like India is still a very large economy by any standards. But when it turns and it goes up into an up cycle, that also is like a super tanker. You cannot just turn them around and make them bad.
So are we in that kind of a cycle?
We are in that positive side of the super tanker's journey now.
And how long will that period be?
It's going to be long. I mean, again, give you some context, the longer the preceding bad period is, the succeeding good period is usually at least 50% of that period.
Okay.
We've had a 10-year period of wilderness.
Okay.
I would easily think a 5-year period of reasonably good times. There will be bumps and ups and downs and all that. Ignore that. I think at least a 5-year period looks
So
very
when did that clock start ticking for 5 years?
When COVID happened.
So that's in 2020.
That was the seminal moment.
Okay.
That's when our next good period started.
Okay. Okay.
We made a break from the previous 10 years
Okay. Okay.
or even 12 years.
So you don't think this will last till the Amrit Kaal, as they say?
I mean, if you happen to call me at that time, maybe we'll again revisit it. But, I mean, suffice it to say, I think we are in a very, very good wicket.
Sorry.
I mean, I hope we don't have any moves from a policy angle that make us get out on a hit wicket.
Okay. Okay.
Because I think the pitch for India is reasonably flat. I think the ball for India is reasonably old. The sun for India is reasonably out.
Okay.
Bowlers are not bowling too well. I think only we can get ourselves out. I don't think the bowlers have it in them to get us out.
So what could be those, since you are using a cricket terminology, what could be those instances where we might get out hit wicket? Couple of instances, couple of problem
We
areas.
had a few in the past. I don't want to dwell on them.
Sure.
But I mean, we don't want, again, I always say this, in a country like India, the leadership, like fund managers, we have alpha, right? That means
Yes.
there is a market return and then you beat, and that is your alpha over the market, right? So what should be a government's alpha? That's the real question.
Yeah. Yeah. Yeah.
If you are a leader of a country like India, 120, 150 crore people, young population growth is 1.2% a year.
That's right.
Is 6%, 5%?
Is
I mean,
par for
in
the
my
course.
view, it's par for the course.
Absolutely.
इतना तो यार 150 करोड़ आदमी सुबह से उठता है, वो खाना खाता है, पीता है, पेट्रोल डालता है, घर जाता है, ऑफिस जाता है, कुछ उतना तो ऐसे ही 4-5% ग्रोथ आएगा.
Correct.
Right? Your alpha should begin after 7%, in my view.
Sure.
Till then, your market return in terms of growth. That's my view of looking at, my way of looking at it. Now, we will grow maybe 6% next year, as far as most consensus goes. My view is also similar to that.
Okay.
That
You
to
say
my
next year, next financial year.
next financial year, correct? 23-24.
Yeah.
So, my view is that is not earth-shatteringly good. It's not terrible in context of the world. But it's not something that I will give a lot of marks to any government. Because 6% for a country like India is barely there, right? So, the things that can not derail it is what we need to worry about. We should be worried about. And to my mind, any big bang policy measures are to be avoided.
Okay.
We don't need brain waves. We don't need brain waves for India. We just need to be a broad guide of this super tanker.
Okay.
We don't want adventurism here in any policies. I think as Indians, as India, I think we are smart enough to figure out ways to grow.
Okay. Okay.
We shouldn't have brain waves.
And I mean, what can expedite that growth?
So the interesting thing is, India has been a conservative country by way of its economic management.
Yeah.
When I say conservative, it means the broad measures are internal debt to GDP and external debt to GDP. Absolutely. Broadly, those two measures show the degree of conservatism you have as an economy.
Absolutely.
On both these fronts, India has been traditionally very conservative after the 91 crisis. So our foreign debt to GDP must be about 20%. I mean, it's almost...
Yeah.
Right, internal debt to GDP was fairly low. It has now climbed because of obviously the crisis we have seen. But still, context-wise, it is not too bad. Now, the way to grow is ultimately you need resources. How else do you fund growth?
Sure.
Right? The resources will come out of debt because you have cut corporate tax levels. So that thing to come back to even parity levels is a while down the road, right? So in the interim, it can be your debt which fuels that growth, which is a problematic thing because debt, once it expands beyond a point, hard to rein back. Then you can only inflate it away. You can't really reduce it. Nobody repays debt.
Absolutely.
You just through increase nominal GDP growth, which
that only can help you.
that only can help you. Otherwise, there's no way on earth anybody can cut back on debt to GDP, right?
Sure.
So it's a tricky thing for the government. I know this government is very aggressive on deficits. Unlike the previous government, this government has been almost in your face in saying that we don't care about 4.5% or 5.5%. What are these? These are just numbers.
Yeah.
For a while, that can be fine, but it can be problematic, a little bit down the road. So the levers for growth for India ultimately are exports, to my mind, are not going to be a lever for growth.
You don't think so?
Your two biggest markets are Europe and US.
And that they are not.
They are, I mean, you don't export to any of our neighboring countries or in Asia.
That's right.
Two biggest trading blocks you have are Europe and US. They are
You're
in
out of
strife.
RCEP.
I mean, how on earth are you going to grow your exports? And if your net exports don't grow, then you have an impact on GDP growth straight away. I mean,
Right, absolutely.
arithmetically you're there, right?
Yeah.
You only had the domestic demand part of it. In my view, and which is what the real thing you should think about, or we all should think about, is whether the RBI is right in raising rates or not.
So you think that a time for a pause has come?
First of all, I don't think they should have raised in the first place.
Oh,
Yes, that is my view.
well, how would you have bottled the inflation genie?
See, inflation is all rubbish anyway.
Okay,
What is inflation? Inflation is a rate of change.
okay, yeah, absolutely, yeah.
Rate of change.
Rate of change in the price.
By simple passage of time, the rate of change will come down.
Okay,
It's only the base effect.
okay.
If your mobile phone is costing $100, it goes to 120, we say 20% inflation, correct?
That's right.
If it goes to 125, but the previous base has gone to 110. So now optically, now it's whatever, 15 over 110, whatever 10, 12, 12%.
I understand.
You wait another period, it will become 8%. We'll say, अरे यार, कम कर दिया, देखो inflation control किया. But boss, वो 135 हो गया already. We are only saying the rate of change has decreased. It is not going to go back to $100, which was the price. Please understand this.
Yeah, sure.
Mobile phone is not going to go back to $100. It's all smoke and mirrors anyway.
Yeah, okay.
My point is, by raising rates, has anybody done this? I'm sure you can do this very easily at BS. What is the interest rate sensitivity of the inflation basket?
Yeah.
Which part of your basket responds?
Well, there is the core and the non-core, which is one.
What is non-core and what is core? Who defines this?
Well, economists doesn't define it.
But I am always having this conversation. How do you define core?
Yeah, well, which is seasonally adjusted, not. Anyway, I think that's a long debate, really.
What I'm saying is a lot of the basket, as far as I have seen, is not rate sensitive.
I agree. Yeah.
So you end up actually hurting growth without hurting inflation. This was the mistake Mr. Subbarao made in the UPA 2 era.
Yeah.
Nothing happened to inflation. By passage of time, it came down, and then oil prices crashed when the current government came. I'm not saying it crashed because of the current government, but it just crashed.
But politically, it is sensitive, no? Inflation.
I know, but you can't be doing things just because you have to do something. Somebody has to somewhere stand up and say, guys, what we are doing has no effect on the villain we are trying to kill, but we end up killing the hero, and the hero is growth. So I'll tell you why I'm saying this again. I've said this even in 2011-12, that you shoot the wrong guy, okay? You don't shoot the villain. Now, today also, we will shoot the wrong guy. When your home rates are now at whatever, 8.5%,
Yeah.
right?
Well, if you look at the real rate, it is not so. It is still I think is just about 2% or so.
8.5% is 8.5%.
Yeah, but real is still 2.
That is, but ultimately when I'm paying 8.5% as a home
I agree.
owner,
Cost is 8%. Yeah.
their outflow element to me is higher by 30% or so as compared to what it was maybe a year or 2 years back.
Sure.
It will have an immediate effect on that. Now, the important thing is real estate is ultimately one of the key determinants of growth.
That's right.
Because the multiplier it has across goods and services is amazing. Like you start with the cement and the TNT bars and the steel and the window paints, the glass, the labor, the contractor, the transporters, to the AC, to the ducting, to the security guard from UP who is finally going to let in all the bad guys and keep out the good guys.
Yeah.
So if by raising rates you end up hurting real estate growth, which I think it will have an effect. I have been talking this time itself to a lot of people. They tell me, sir, it is beginning to pinch these higher rates.
I understand. Yeah.
That what is that going to do? It's going to hurt your growth. But will that bring oil prices down?
Fair enough. Point taken. Do you think that on the demand side we have done something wrong in the sense that there has been a lot of demand destruction and no effort has been made to revive demand? The MSME guys are still clamoring for more relief, and they are the ones who are actually were sustaining a lot of demand. And is that an area of concern for you? You see that?
I think I don't necessarily agree the government has not done enough on demand stimulation,
Okay.
but ultimately, I mean, in my view is that you have limited bullets
Okay.
and you have to fire them wisely.
Yeah.
Now, it can debate whether corporate tax cut was a wise bullet to fire or not.
But that was in 2019, so.
Yeah, but I mean, maybe that bullet, if you
But kept it.
kept it for some other areas, it would have been better. But those debates are endless.
Yeah.
But the reality is that I don't think the government has given the state of the deficits. Today, our twin deficits are in the double digits, you know, between 10 and 12%. That's a pretty high number by any standards. You don't have unlimited money to spray around.
Yeah.
The worst thing we can do is to start copying the United States of America in terms of fiscal profligacy, because they have their internal and external, everything is in dollars. Ours is not.
Okay.
So we can't copy a rich man's game and hope to survive on that.
That's right.
So we have bullets which we can't just spray around.
That's right. You know, it'll just about, I think 6 weeks later, you will have this budget. What are your thoughts on the coming budget? What do you think it should avoid, and what do you think it should actually focus on?
I haven't thought about it a lot. I've already given it a rating which is 12 out of 10.
Wow. As a newspaper, we have stopped taking ratings, you know.
But I will still give it if you happen to invite me. That's my right.
That's right. But still, you know, on a serious note, what do you think the budget should avoid? Let's start with that.
I mean, as an equity investor, they should not tinker around or rather increase the LTCGs or whatever STCGs or anything.
So capital gains tax structure should remain untouched.
I think it is pretty, you know, good. Don't tinker around with the time periods or the rates or anything, because these things have a nasty habit in India of creeping up. You know,
that's right.
everything keeps creeping up. Once they open the door to some taxation, it never, goes back.
Yeah.
I just hope they don't do that. The equity markets have been buoyant. Government needs good equity markets to do a lot of the things it needs to do. So they should be very rational in these things.
Okay.
You know, don't tinker around with the capital gain structures.
And on, you said that you have strong views on the fiscal consolidation, and you think that the government should return to its path of fiscal consolidation as adhered to earlier.
It should, but I don't think it will, because you are entering an election period.
Yeah.
I really doubt if the government is going to. And if we can see a 6% year coming up, so can the government.
Sure.
So in that kind of scenario, which is pretty clear that we will slow down next year. I mean, that I think is almost a given. Given a variety of factors like the crisis in Ukraine as well as local macro challenges. I don't think the government will rein back on the balance sheet expansion. I think it will expand. Whether we agree, disagree, that's a different discussion.
Yeah. You know, it has been such a engaging discussion that I realized that we have crossed half an hour, and that was our time.
Okay.
But I cannot let you go if I don't ask you this question. Your views on Indian politics, if you wish to care. If you want to avoid that question, please avoid. But it will be good to know your views on politics as such. Let me put it this way: what role does politics play in the markets?
So I think politics in India, in a developing country, I mean, it has a very central role to stock markets. I mean, you can't ignore it. That said, I must only point out one interesting fact, and which is the United Front government, the much derided United Front government, okay, of the second half of the 90s, delivered 8.5% GDP growth for the 2 years it was in power.
Yeah.
And we had a fantastic equity market period in that, 97, 98. Even the 99 period. So, you can take your pick on what my view is. My view is, in a growth economy like India, as long as politicians behave responsibly, and we have been lucky to have had a series of good leaders in India, including the current one. I think on the leadership front, India has always had good leaders who are responsible in every sense of the word. And I think the tradition just continues.
Will it be correct to say that when all boats are rising, leaders do well, but when all boats are not rising, leaders don't do well.
That is possible, but the true test of a captain is
When
when the boat is sinking, does he jump off or does he try to save the ship?
I think time will tell.
Time will tell.
Just three quick questions and quick answers.
Sure, sir.
What keeps you happy?
Good health.
Good health. And what keeps you worried?
Loss of wealth.
Loss of health. And what makes you satisfied?
When I play with my daughter.
Fantastic. Thank you very much, Shankar. Thank you very much for this candid, forthright, straight from the heart answers. And we are really deeply grateful. And
thank you. Thank you for having me, AKB.
Thank you.
Real pleasure and privilege. Thank you, sir.
Thank you.